Morning and welcome to COBRA on this rather chilly morning. We've got a fantastic show ahead of us. Some stewards from the South African Reserve Bank have joined us on the show. Welcome to COBRA. As you know, a pro bono initiative co-founded by Schindler's Attorneys, IQ Business and Engaged Business Turnaround, where we offer pro bono free advice, legal, financial, consulting advice to businesses in financial distress due to COVID-19. So as I said to you, we've got a fantastic show ahead. We've got Philip Tromp and Christo Visser, two veterans from the Reserve Bank and men that know the payment system very, very well. Today's show will be moderated by Mark Hyman, who's a colleague of these two gentlemen. Before I hand over to Mark, Philip Tromp was General Manager responsible for IT and payment systems at the South African Reserve Bank. In the mid-90s, he led an interbank team to modernize the South African national payment system, resulting in the development and implementation of SAMOS, the South African Real-Time Gross Settlement System, the promulgation of the SA-NPS Act, the establishment of PASA, participation of non-banks in the payment system, as well as enabling delivery versus payment in the financial markets. In 1999, he left the SARB to establish Parago Financial Systems Enablers Pty Limited, a company focused on the development and implementation of real-time gross settlement systems and other financial infrastructure solutions for central banks globally. In 2005, he co-founded TrustLink Pty Limited to provide payment including SWIFT and data exchange services to financial institutions and corporates in sub-Saharan Africa. And in 2016, he established CHIPS AG, a software development company aimed at developing a bank-independent digital money solution, providing safe custody and real-time payments for small business and consumers. CHIPS Money Manager was launched in SA in August 2019. Christo Visser is a chartered accountant and former registrar of banks at the South African Reserve Bank. In 1977, he joined Volkskas Merchant Bank, where he established the finance department and was responsible for developing and implementing systems and controls. Thereafter, he joined the South African Central Bank with varying roles during his tenure, which included the responsibility for the internal finance and operational activities of the banking supervision. He also headed the banking regulation and supervision function of the central bank and served as a member of all the operational committees. He was part of the team that drafted the Banks Act in 1990 and head of the team drafting the regulations to the Banks Act in 1990. After retiring from the South African Reserve Bank, he spent years as a consultant for the International Monetary Fund, working in Africa and beyond. Visser is the non-executive independent director of First Mayabuye and is in charge of corporate governance and oversight. Now, Mark Hyman, who will be moderating today's session, is well positioned to moderate the discussion, and he developed unique and niche products together with the Reserve Bank, and has implemented unique low-cost disruptive banking solutions. Mark is the owner of Merin Financial Services, South Africa's third largest third-party facilitator of MasterCard products and solutions in South Africa, and founder and director of NFSS HELL 2018, a SAFTU and NUMSA union-related development company, and Burma Holdings, a diversified innovation company servicing the private medical and broker sector, AVR Medicheck, as well as a forensic audit division, BB Forensics. Mark began his career at Edgars before taking a role at Link Chain Pharmacies as the marketing director. Thereafter, Mark embarked on his own as a consultant in the pharmaceutical and healthcare industry to major multinationals and local industry leaders. Mark then developed and deployed real-time financial data distribution and launched the first prepaid MasterCard through the CVS pharmacy chain and brought this concept back to South Africa. So it's great to have these three gentlemen, vastly experienced, and the discussion today will be the future of money in the SA context, evolving payment landscapes during COVID-19 and beyond. Mark, over to you.
Good morning, and thanks very much, Gary. Thank you very much for allowing us to host this webinar. And welcome to Philip, who's sitting in Zug in Switzerland, the crypto valley of cryptocurrencies in the world, and on a warm summer's day in Switzerland, and to Christo Visser from I think a pretty cool George in South Africa, welcome to this webinar. I think that looking at where we are in terms of COVID-19 in South Africa, with the banking systems that we have, the inability to create a virtual banking platform, I'd like to start off by handing over to Dr. Philip Tromp to give us an overview of the South African payment system and where we see the future going in terms of the future of banking in South Africa. So over to you, Philip, if you can switch on your video and your audio, and let's hit the road running with the future of money in South Africa.
Good morning, everyone. Thank you, Mark. Thank you, Gary, for the introduction. It's a pleasure to be here, and I look forward to the session. And without wasting any time, let's get into the discussion. The topic, as Mark has alluded to, is the impact of COVID on our payment space and what that means in fact for the future, lessons we've learned and what we can pick out of that. So if we move on to the first topic. COVID hit us all very hard, and some people more than others, of course. And a number of things have come out which require the attention of the payments industry. The first one is that it was horrible to see that social distancing problems occurred when the unbanked went to fetch their grants, the grant beneficiaries, in order to collect their money. We saw long queues, we saw a lot of very close contact between people, and that was against what the government was trying to achieve. Second thing that came up is that contactless payments all of a sudden became a health requirement rather than a convenience factor. And there's been a lot of movement in that direction in various retailers and the public at large. Then a third aspect that came through is e-commerce, the ability to deliver essential goods to your doorstep. And of course, then the payment thereof also comes into play. A next problem is that even where government or philanthropists have the funds available to distribute to the needy, it turned out to be very difficult to get money to those in need. Another aspect is that in lockdown, even people who had worked before could not get to the work, in other words, could not get paid. And it was very difficult to get money to these people because they had no electronic channel to utilize. And then finally, I think the very interesting development is that it is possible to work from home for some people. And around that, a lot of initiatives will come about in future. So if I then move on to the current banking scenario, these numbers were produced by MasterCard in a recent survey. What it pointed out is that only 14% of customers of banks are fully serviced, meaning that they have access to credit cards, loyalty programs, overdrafts, etc. That represents 5 million people. Then we move on to the lower use category, where you have 23% of the bank customers who only do 3 transactions per month or less. I'll call them low usage customers. Then we move into the areas where the bank systems are not very well used. The first one is in and out only, where people pay money into the account, or their money is paid into an account and they withdraw it as soon as they can. The money just lands and it's taken out again. That represents about 26% of the customer base. The next category is a dormant account, where the account hasn't been used for some time, and that represents 6%. And then we have a mass of 31% who have no account at all. So if you look at the problems I described in terms of COVID, you see that the 31% is definitely involved, and potentially also the 6% is covered by this problem. So you can see very clearly that there is a problem in getting the unbanked or the underbanked to use the system properly, the systems that are available to the general public. Now, looking at our national payment system, of course, South Africa has a very modern, safe and sound national payment system. And from my understanding and my experience, it's on par with the best in the world. But unfortunately, as you've seen on the previous slide, it serves the interests of big business, the more affluent sector of the community, and those in the cities and towns better than the other people involved in the economy. In fact, I believe it's biased against the small and the poor, that is small businesses, micro businesses, the informal business sector, the lower and middle class, and all those who struggle to make ends meet, as well as people in townships and rural areas. I think there is also a problem there. So we need to find a mechanism that can reach also those last category of people I mentioned. Now, what is the current offering? And what I want to do here is just to illustrate to you what the problem is if you work in the lower sectors of the client base. In other words, the not so well served. And the example I want to use is using a card to access cash, which is what most of those customers do. And although it's very difficult to pinpoint the costs here, I've used a sort of a generalized cost estimate across different banks. And some banks will be cheaper and some banks will be more expensive. And firstly, looking at the ATM cost as it's by itself, we talk about costs of 2% per 100 Rand and a fixed 10 Rand plus 2% per 100 Rand above that. So the 2 Rand per 100 is typically at your own bank. And then when you look at the interbank market, you look at going to another bank, not your own bank, the fee of 10 Rand plus 2% kicks in. Now, if you imagine in the rural areas, there might not be 5 or 6 ATMs from different banks in the town or in close proximity. So people would typically go to the bank that is available if they don't want to go into town and incur that expense as well. And then you must keep in mind that for these ATM users, or for ATM users in general, charges are not shown at the ATM. So when you do a transaction, there's no indication of costs. I've seen some messages in South Africa on the ATMs that says you are using the ATM of not your own bank, but another bank, and you might incur additional costs. But it doesn't quantify those costs. Secondly, the fees are deducted from the user's account, running in the background. The user does not see that. And then the access to statements and information is also limited. A low-end user can request a mini statement at the ATM to see a few transactions. Now, if we take that to an example, additionally, you must also keep in mind that there is a fee when you make a balance inquiry. There's a fee for insufficient funds to replace your card, etc. Those fees are also not very visible to the uninformed. If I then look at a practical example, if we take an old man with weak eyesight and a fear of technology who wishes to withdraw 100 Rand at an ATM, and he believes that he has about 120 Rand in his account, few problems set in. He inserts his card and he enters an invalid PIN. As you all know, you get a few messages and then you have to retry. So you can retry again. There's no cost associated with that as far as I can ascertain. Then after getting the PIN right, on the third try, he enters an amount of say 100 Rand. The ATM returns an insufficient funds message because, of course, he only has 80 Rand in his account. And he incurs a fee of 8 Rand, which means he now only has 72 Rand, as a matter of fact. Believing that he maybe has 80 Rand, so he tries again, and he gets another insufficient funds message. So now the man is really bewildered. He has picked up another 8 Rand fee, which he's not aware of. So a bystander tries to help him, says he must do a balance inquiry. He does a balance inquiry. That costs him another 8 Rand. And then seeing that he's got 56 Rand, he can successfully withdraw 50 Rand, which he does. For that, he pays 12 Rand, and his actual balance is -6. What that means is he's been charged 36 Rand for this transaction, and he's only got 50 Rand out of the machine, and the seepage on that account then of that amount comes to 72%. So, sorry, we moved on too quickly there. So this is a sad story, and I think I remember years ago my mother was about 85 years old at the time, and she had immense difficulties in withdrawing cash at the ATM. So I saw living proof on her bank statements of what actually happened in those cases. And then if you say, but why don't you go into the branch or into the bank's premises to do your business? Of course, that is the most expensive of the lot by far. So what is the alternative? What can be done? Well, in order for us to progress, we have to look at the regulatory environment. And in this case, in the payments business, there are actually 2 acts that are involved very directly. The one is the Banks Act of 1990, and the other one is the National Payment System Act of 1998. And fortunately, we have Christo with us to talk about the Banks Act and just give us a little background on that. Christo, over to you.
Thank you, Mark, and good morning. Thank you, Philip. Good morning, Mark and Gary. Good morning, and good morning to everybody. And greetings here from the Southern Cape. As far as the Banks Act is concerned, the Banks Act is written around deposit taking. It envisages that the general public deposits their money with the bank. The bank then pools this money and then intermediates and on-lends. It did not contemplate the situation, as Philip alluded to there, for the 26% of people that just use it as an in and out. Therefore, to use the banking system and opening accounts, which is expensive, as Philip just has shown, it is very difficult for the banking system to afford this payment mechanism of depositing money and immediately taking it out, because it's a huge, because the bank can't intermediate that funds. It does not. It's not available for the bank to use as a means to on-lend. Therefore, if when one looks at the present situation, I think that the banking system did not, if you look at the Banks Act, it did not really cover a lot about the payment system, because there's a different act about it. And that's basically as far as the regulatory environment for the banking system. And as you all know, the banking system, the Banks Act is written around the risks. And risks and therefore you have all these different requirements of capital requirements and liquidity requirements that banks do to mitigate the risks. So Philip, over to you again. Thank you.
Thank you, Christo. We'll get back to you later on. Moving on to the Payment System Act. Sorry, jumped the gun, yeah. The role of PASA in the payment system is empowered by the National Payment System Act. Now, the whole idea with PASA was that PASA would be a self-regulatory body that would look after the payments business on a day-to-day basis. And in that process, they are authorized to issue licenses to non-bank payment system providers, because the NPS Act of 1998 made provision for non-bank participants in the payment system. And PASA was given the authority to license these parties to participate. And as you will see in the payment system today, there are many payment service providers, fintech companies who are offering different functions and different solutions in the payment space to make it more convenient for users to use. Then secondly, the facilitation of the self-regulation is in the hands of PASA, and they have a board that looks after the the managerial and strategic issues, and then they have an office in Johannesburg which does the actual operational work of the PASA Association. And then finally, they also try through their work to facilitate collaboration and ecosystem development so that the system is a total environment that's accessible to all parties to exchange payments between different banks. Now, if we move on to the evolution of payments, I'll take you back in history to the real beginning, where we had physical peer-to-peer payments. Of course, we had no automation at that stage. And in the beginning, you swapped your pig for a chicken, and so you bartered in order to exchange value between different parties. And then 500 years BC, coins were introduced, and that was followed a long time later by banknotes, where the Bank of England in 1694 issued their first banknotes, and that was followed by checks. And after checks, I think there was a long period of very little development until computers arrived in the 60s, and we started with the automation era, and checks were the first instruments that were computerized, and the automated clearing bureau was established. And that was followed then by credit cards, by debit orders, ATM cards, debit cards, real-time interbank settlement in 1996, and then internet banking, and so it went on. That I would call the automation era, and that is the era of switching and clearing. Now, for those who don't know, if you do a transaction with a customer of another bank, there is a switching process that runs in the background, which makes sure that the money is moved from your bank to the beneficiary's bank account. That is a process that takes place every night and ensures that by the next morning, all the banks have settled their positions. Now, that process works well. It processes millions and millions of transactions daily across the world. But in the early 2000s, there was a drive to move towards peer-to-peer payments. In other words, the work done between the blue lines, I hope your lines are also blue, that work has been circumvented by doing digital peer-to-peer transactions. And the first example of that was really Bitcoin, which produced a cryptocurrency, which enabled you to transfer value from one user to another user without the intermediation of a bank. And as you know, Bitcoin is still around. A lot of people are using it for different purposes, but it has not really found a way into the retail payments market. There have been efforts here and there. I know here in Zug in Switzerland, they have a few shops that accepted Bitcoin for a while. I'm not sure that it is still being used. And I don't think it's really a suitable mechanism for real-time payments. So around 2016, we got working with central banks on digital currency. In other words, on the right-hand side, you have central bank digital currency. And a lot of banks worldwide are looking at that. But as you can see from the question mark, there's still not certainty when this will arrive. And there's a lot of water that must run into the sea to make this happen. A lot of strategic decisions, a lot of organizational restructuring, system restructuring in order to facilitate digital currencies. And in the meantime, we realized that we can introduce an immobilized currency, which basically means that your money is stored in a vehicle that looks after the money, but the money is still in the currency of the country, in other words, in fiat currency. So if you have 10,000 Rand, you can put it into, you can immobilize that in an account and then make that money available to transact as though it is cash, in other words, in a peer-to-peer, on a peer-to-peer basis. So what we have today is these two models, the one being centralized digital currency, which a lot of countries are looking at, and then a scaled down version of that, which is really making your funds digitally available. And that cuts across all levels of society and all customer types and customer capabilities. So what is the solution then? The solution is lies in mimicking cash. So we look at the characteristics of banknotes and coins that we all use, and we pick up a few pointers from there. The first one is that you can store cash and you can easily access it at no cost. Put it in your wallet, your money is there, you can use it whenever you want at no charge. Secondly, it's easy to see how much cash you have. In other words, you always know by opening your wallet, you can very quickly determine how much cash you have. You do not need to go to an ATM to do a balance inquiry or onto internet banking or whatever to determine how much money you actually have. The third one is a very important characteristic, is that the holder of cash is the legal owner thereof. In other words, if I have a banknote in my hand with the governor's face on, I own that money. I am the legal owner because it is a bearer instrument. And if I want to give that money to Mark, I just give it to him. And once it's in his hand, I've transferred the legal ownership of that 10 Rand to another person, another party. The fourth point is that cash is free to spend and is widely accepted, as you know. It's easy and cheap to send cash. Putting it in an envelope and sending it is a practice here in Switzerland. I don't think we do it that often in South Africa. But cash received is also immediately available to the recipient to use. Now, if we can build a system, a solution that does what I've described here, I think we have the ultimate solution, because that will enable you to transact peer-to-peer with instant value and very fast. Now, what does the future look like? Well, I believe the future holds that digital money will be available to all customers, all consumers and businesses, formal, informal, large and small, giving access to e-commerce. In other words, digital money can be used on e-commerce, it can be transferred in real time, and it's immediately available. Banks can provide products or will provide products and services reachable through open banking, There will be no debit orders. This might be news to some people. And there will be no account fees. That's my contribution for the morning, Mark. I think we can take up some questions now.
Okay, thank you very, very much, Philip. I have a couple of questions for you, which I think are pretty important. What makes a digital, and you call it a digital currency, and you refer to it as a wallet? Now, I think I'm going to pose the question to both yourself and to Christo at this point in time. What is the legality of what we see out in the marketplace of all of these fintech companies providing wallets that are not linked to any formal framework in terms of regulatory framework in terms of the central bank, i.e. the Reserve Bank, or for that matter the Financial Services Board, the FCSA today, and in terms of the general requirements around the FIC. So, you know, that for me is a very critical question to ask. What is the difference between an immobilized digital currency, digital fiat currency, versus the traditional wallet that we're seeing out in the marketplace?
Christo, maybe I can start and you can follow up. When I left the Reserve Bank a long time ago, the first thing I was always asked by people providing payment solutions or thinking about payment solutions is, what can I do to avoid a bank account? Is there any way that I can avoid this? And my answer always was simply no. It is impossible to do that. The Banks Act prevents you to do that, so it can't be done. That implied that people who wanted to bring solutions to the market in South Africa had to acquire the support of a bank, had to have a bank account that is sponsored by a bank into the payment system that would enable them to use cash that they have put into a secure account at a cost, of course. Christo, I don't know if you want to add something.
Yeah, I want to, you know, once you take the money from the general public and you pool that money, you put it in one account, which many of these providers do. I think they might be falling foul of the Banks Act, because the Banks Act is very clear that as soon as you start taking deposits from the general public, it is deemed to be falling under the Act of the Banks Act. So, Mark, to answer you, I think a lot of these probably are not all that legal, in my opinion.
Okay, thank you very much, Christo. Philip and Christo, we've seen the emergence in South Africa of a vast number of new players. Let's not call them new players, but the mobile networks, the MTNs of this world, the Vodacoms of this world, who have attempted and continue to attempt to enter the banking space. They have all linked up with either a bank, other than the initial launch of M-Pesa in South Africa via Vodacom, and the Yellow Bank, which moved from the Yellow Bank to the Yellow Bank to today the Momo Bank. Where do you see the difference between an immobilized digital currency versus the network operators' processes or programs that they are attempting to introduce into the South African market? We see, for example, that Momo claim to have 1 million users on the application. Vodacom got out of the M-Pesa market, but are trying to get back into all of the banking sector via the mobile operator. Can you talk to us about those elements and where you see those as players in this market? And I think one can include in that environment the new developments of the time banks of this world. And where do you see them fitting into a market? And what is your opinion of those particular processes?
Yes, I think the difficulty with the current scenario, of course, as I mentioned, in the South African setting, you do need to have a bank that sponsors you into the payment system. And whether you are, whether it's a mobile operator or anybody else, there is a cost that you must incur in terms of having that bank facility and the services that the bank provide you with. That has been a stumbling block in the past. M-Pesa, as you know, was a roaring or is a roaring success in East Africa, and previous attempts to launch it in South Africa have not been very successful. Why? I believe that the regulatory framework in those countries was not as strict as South Africa. And in this case, in South Africa's case, there's a very strong framework that everybody must abide to. So that incurred some difficulties and some costs for those providers. Christo, I don't know if you would like to add something there.
I think the store of value, you know, where do these people put their money? You know, there must be a store of value somewhere. And then, and that I think always goes back to a bank at this stage. And the other issue is the compliance cost, as you mentioned about. The compliance cost is a huge cost. Once you're in the banking sphere, you are subject to the compliance cost.
Okay, thank you. We have an interesting question. We have two interesting questions so far, and I'd like to raise the first one. And that comes from a gentleman by the name of Coogan Pillay. Coogan and I are personal friends, so thank you, Coogan, for the question. Good morning, comrade. So Coogan's question is, COVID has brought to the fore the inequalities on all levels. How do we address this in the banking sector, i.e. executive remuneration versus service levels? And the next comment that is made within that is, and I assume that you're referring to Comrade Bladen Zamandi, has initiated a review in the HE sector on VC salaries. Is that question understood, or can we bring Coogan on to raise the question? I don't know if that's possible, Gary, because some of his acronyms I'm not quite sure of. Philip,
you want to?
Christo, you want to run with the remuneration side?
Well, I think that what is remuneration? It is actually paying someone, you know, what the market demand. You know, if it is always what the market dictates. That's what you pay someone. And he's got a good comment there, and I think the market has changed, but it takes time for the market to adapt to you know. So your remuneration, everybody's remuneration, is depending on scarcity, your contribution, and I personally also think that will change as we go, because the whole landscape has changed.
I think the relationship between costs and services is an historic one. The way the systems have been designed in the past, the whole clearing and settlement model that we have attracts cost by its very nature. So what the digital currencies do is they circumvent those costs by moving the money or the legal ownership of the money from a wallet on one machine to a wallet on another machine, without having to determine which bank actually is behind the transaction or whatever, as you have in the normal, the traditional mechanisms.
Okay.
Second part of the question I didn't understand, Mark.
Okay, Gary, if you could bring up Coogan Pillay, and he can actually raise the question because of the acronyms that he has in terms of HE sector and VC salaries. Good morning, Coogan. If you could unmute your microphone, Coogan.
Morning, Comrade Mark and colleagues. Can you hear me, Mark?
Yes, we can. We'd love to see you.
Well, Well, I'm not sure how you do that. You know, I mean, you are the IT fundi. Is it okay like this, or must I go and do the video thing, or?
Okay, let's go for it.
All right, lovely. Great discussion, colleagues, Christo and Philip. Thanks for that, and Mark, thanks for the invite. What you call, you know, as Comrade Mark knows, I'm an ordinary citizen, and the COVID crisis has exposed quite a few things. You go to the bank, there's long queues, and there's pathetic service levels. And then if you look at that, doesn't translate to the what you call safety precautions that the minister is talking about. And then you look at executives taking massive salaries and bonuses. And my thinking is it's time. COVID has now forced us that we now relook at this. And I think both Philip and Christo spoke about the historical trends. And we've seen President Ramaphosa leading by example, cutting executive salaries during this COVID period. And more recently, Bladen Zamanda is leading a review of the higher education sector. He's looking at the inequality between vice chancellor salaries and the lower level salaries, and then also in terms of transformation and output and all the other issues. So what I'm saying is, I think the time now with such massive unemployment we have, we need to relook at this. And if I can give a good example to summarize what I'm saying, you might remember the Marikana crisis, where workers were asking for 12,500 Rand a month, and directors were taking between 20 and 30 million Rand. And I think we must agree that's a moral crisis. These directors cannot be adding that kind of value. And I think we need to relook at it. I'm not saying that what you call the 12.5 is justifiable, but certainly that kind of inequality is still persisting today. And I think the president is going to require support from us, not just Bladen Zamanda, but all the sectors, including the banking sector, which I think remains largely untransformed, and especially in terms of service delivery. That was the point I was making, Mark. I don't know if that covers it, Christo and Philip.
Yes. I think, thank you, Kugan. You know, this crisis did bring to the fore is it'll have a big push on cost. Once you have this big kind of push on, you know, the banks will not, I don't think, make the profits that they've made in the past, in my opinion. Therefore, all of these people's salaries will have to be reduced. I think it speaks for itself. Because there's not so much to go around anymore.
I'd like to come in there and raise a question based on your comment. And I think, Philip, you spoke earlier about the immobilized digital currency, and you spoke about the fact that this opens up a new capability of transactability at exceptionally low cost, if at any cost at all. So the question that I'd like to ask, you talk about unbanked. I think that with the introduction, I was pretty involved over a period of time during the SASSA progression and development of distribution of 10 million cards and the compliance requirements sitting around that. So I think that we do have people who do have banking accounts, but I do believe that to a large extent people are inappropriately banked. Now, with an immobilized digital currency, as you have, for example, in the CHIPS environment, can you talk to us about the financial inclusivity that then creates for the entire 59 million people in South Africa, the 34 million people who you claim are as unbanked, and I would refer to them as appropriately banked, and getting to the ability for not only peer-to-peer, but person-to-person, person-to-business, business-to-person transactability, and getting a real-time clearance payment solution, which today, from the traditional banks, can cost you anywhere between 50 and 85 Rand to do a real-time settlement that can take up to 1 or 2 hours, whereas in the immobilized digital currency space, it's instant. Can you talk to us about the financial inclusivity that you see in the broader sense, and I think would then address the question about the equalization of banking and transactability across the nation?
Yes, thank you, Mark. I think the digital money will enable or enables people on all walks of life and businesses, from informal to major retailers, to accept payments from anybody. Firstly, to accept payments and then to make payments. Because you are working in a person-to-person, or as you say, a person-to-business scenario, the money flows, the ownership of the money flows from the payer to the beneficiary in real time. I think that is the beauty of that. Of course, then you have the ecosystem as it exists today, where most people on the higher echelons, or the more prosperous people, have credit cards, loyalty points, all those nice things. They have their bank facilities, they're happy with their facilities. But if they have to engage with somebody who does not have those facilities, there is a problem. You have to convert to cash and hand over the cash, or send the person to an ATM to go and withdraw money at the ATM. So you have to convert from the electronic medium into the cash medium. If you come from the other side, if a person wants to do an internet transaction, he cannot put his cash into the internet. He has to convert that cash by some means into an electronic payment, typically through a bank account today, in general. Put the money in the bank account, then you can do an electronic transaction. So there is a constant exchange of value between electronic and cash. And what we're trying to do is to break that divide, so that people have access to the same mechanism, the same functionality, the same convenience at a low price, in order to enable them to participate in the full spectrum of economic activity. Whether you sell apples on a street corner, or whether you have a cake shop, or whether you have a big business, a big retail store, we must all be able to utilize our payment mechanism at all those places, like we do with cash.
Thanks very much, Philip. We have a question from Peter, who asks the question, what is the difference between digital currency and cryptocurrency?
I don't think there is a difference, Mark. I think it's the same thing.
But you talk about immobilized fiat currency. So maybe I think the question would be, in terms of Peter's questions, I think he's referring to immobilized digital fiat currency versus cryptocurrency. I agree with you on the concept of digital versus crypto.
A cryptocurrency is a digital currency, or a cryptocurrency is a tokenized mechanism similar to Bitcoin, but it is appropriate to a country. It's got a jurisdiction. It is not free global transmission as we have with Bitcoin. So a central bank can issue a digital currency rand, which will then be issued by the central bank and distributed by the bank into the economy, and accessible. It will be accessible to all people. So that basically means, instead of printing a 50 Rand note, the central bank will issue 50 Rand in digital currency, in digital rands. You can imagine what impact that would have on the economy if the central bank would issue digital rands. I mean, that would be a major upset to how things are done today. It will have an impact on everybody, every business, especially the banks and the financial sector. The immobilized fiat currency is where you have money, you put the money in a safe place, in a neutral place, where it is digitalized and you can use it in that place. So if you get 100 Rand payment for what will you get for 100 Rand? For selling apples, you can take that 100 Rand and receive it in your wallet, in your digital wallet, and the money is then kept digitally and you can transact from there. You don't need to convert back into cash or convert into electronic. It is already in a usable digital form.
Thanks very much, Philip. An interesting question that I have, that I'd like to pose to Christo and Philip. If one looks at the inappropriately banked, people who have traditional banking accounts, and we're talking about the vast bulk of the population in South Africa. Looking at statistics coming out of the Big Four, maybe the Big Five, but let's refer to them as the Big Four. And if we include the Capitec environment, who came out with some rather disastrous results during the course of this week, the bulk of those transactions that are done electronically via the existing electronic facilities that are available on a cell phone are for three purposes. FNB quotes that 70 to 80% of the electronic banking that they're seeing, i.e. smartphone banking, is A, for purchases of electricity, B, for purchases of airtime, and C, for money transfer. Money transfer being the transfer of money between an employee in Johannesburg getting money back to the rural environment, to a parent, to family members and extended family members. Now, those are coming in at huge costs to the consumer. They are not free. How do you see the immobilized fiat currency in terms of doing those type of transactions? And will that help the broader community with an immobilized digital currency?
Yeah, Mark, the results we're seeing so far from the use of the system is that airtime is a very popular purchase within the digital environment. So what it would mean is that if you get paid in immobilized fiat currency, the money will go from your employer, from your employer's business portal. It will go into your account in the immobilized value store. And from there on, from that moment onwards, you can buy your airtime, you can buy your electricity, you can send it to your mother, you can do whatever you want. You can actually go into the formal NPS and you can go and buy goods at a grocery store like Checkers or Pick n Pay.
So in the immobilized digital currency, is that transactable in the national payment space, i.e., as you referred to, the Pick n Pay? Can you go to an ATM and withdraw money?
Yes, the thing is you cannot create a solution here that will put you in a different box. You have to be able to transact with the broader economy. And in order to do that, you have to be fully integrated with the banks. You have to be fully integrated with the credit card world, the debit card world, and with the merchants. And that is today, it's practically possible through various fintech providers. You can get access to all those services. In other words, you can pay the guy servicing your fridge. You can pay him in digital money. He can then go to the bank, to an ATM, and he can go and withdraw the cash if he needs the cash, or he can go to a retailer and withdraw the cash at the retailer. He doesn't need a bank account. He can operate totally without a bank account. You don't need to force everybody into the banking system and into bank accounts and have millions and millions and millions of accounts that are very seldomly used. So it's a solution that fits first world and the developing world and the informal sector.
So how many retail outlets does the immobilized digital fiat currency currently service?
Well, at the moment, if you have our application, you can shop at about 150,000 stores by utilizing the normal QR codes that are presented through MasterPass, which is a common standard. So, for example, if you are a Zapper user or a SnapScan user, you can buy at that grocery store. And if you are a digital currency, a digital fiat currency, immobilized fiat currency user, you can use the application to shop at those same stores. So you have access to the current national payment system infrastructure as it stands, as do all the others. But what it makes possible is you don't have a bank account or a card or a credit card specifically. You can now shop on the internet as well and do transactions, buy off the internet as a guy with a credit card would have done.
Thanks very much. We're coming towards the...
Yes. Mark, can I maybe come in? I think one thing that one must also keep in mind is this currency, this digitalized currency, it's also, there's an audit trail. You know, you can, it's not as if though, and if you lose your wallet, there's a value store, and there's an audit trail for each and every single transaction.
Okay, thanks very much. Gentlemen, I hope for the audience who's been present, I hope that they have found a great deal of interest in terms of the future forward, in terms of where we're headed, in terms of money in South Africa. And I'd like to ask Gary to do a close.
Thank you. Mark, thank you very much. It's been an absolute pleasure to have Dr. Philip Tromp and Christo Visso with us. And thank you to you, Mark, for moderating the session. I think it was very informative and enjoyable. So, as you know, every day at 10 a.m. we have webinars here on COBRA. Tomorrow, Lee Naik from TransUnion is with us. A very important topic, of course, at this time with the South African consumer really under pressure. That will be an interesting talk. And then on Friday, we have Singular are back, and they'll give us the stats on how COVID-19 is doing. It's really starting to grip, particularly the Gauteng area, but also around the country. So, as we said, COBRA, a free initiative, a pro bono initiative offering free advice. You know, speak to us. We can get you in touch with the gentlemen that were on the show today, or any other people, or any of our approximately 50 partners that we have in the project. That is it all for this morning. Until tomorrow, we hope to see you again. Goodbye.
Thank you. Bye-bye.
Thanks very much. Bye.